What actually is austerity? Well, because of inflation and economic growth, governments usually have an increase in revenue, or the money the government gets in tax revenue each year. This again normally means that the government will increase the amount it spends on health, defence, roads, social security, etc. In general, austerity or an austerity budget is where the government, rather than increasing the spending, cuts the amounts it spends. However, it's a little likely to be more complicated than that. Austerity budgets are introduced by governments when the amount of debt or the interest payable on the debt is becoming very difficult to manage. In an attempt to bring the debt under control, either by slowing the rate of increase of the debt or by paying off some of the debt, the government needs additional money from somewhere. Now, three main sources for this money that governments normally tap into in times of austerity. Firstly, they can increase taxes, either the rates of taxes or the number of people that pay taxes or the amount of goods and services that have tax levied upon them. This of course is generally unpopular, especially as there doesn't seem to be any benefit in increased services as a result of these taxes. Secondly, the government can cut spending. Generally this means cutting some of their larger budgets like health, pensions, education, welfare. These of course are generally politically sensitive, and whilst the government can also try to reduce the amount of spending it wastes, governments are not very good at doing this. Now, the third method is to sell off government assets. This can be something as simple as a building or a piece of land that the government owns to vast companies and monopolies that the government was running and operating for the benefit of the population as a whole. Selling these off may reduce the government income for future years, but of course this can only be done once. However, a sold off asset may actually in private hands be run more efficiently and also would generate additional tax revenue. There are, however, problems with austerity budgets. By their very nature they tend to be unpopular, with people either claiming that they're unnecessary or that the pain of an austerity budget should be balanced differently, with someone else having to pay for it. Also, since generally austerity budgets are generally introduced at times of either recession or very slow economic growth, the increases in taxes and cutting of government spending tend also to reduce economic growth still further, leading to a claim that an austerity budget is just making the economic situation worse. However, since governments are normally reluctant to introduce an austerity budget due to their unpopularity, an austerity budget is only introduced as a last resort, and whilst introducing them may make the situation appear to be worse, not introducing one and letting the amount of government debt increase along with the interest payable on the debt will be even more harmful to the economy. The more a government delays in introducing an austerity budget, in general the tougher the austerity budget will have to be and the longer it will have to be in place for. In order to avoid the worst impacts of an austerity budget on the economy, government may try to boost economic growth at the same time. A normal method would involve increasing spending on infrastructure projects. At a time of austerity this really isn't normally possible. The next common step is actually to cut the rate of business tax. Now, whilst this may seem counterintuitive, it may actually increase the tax revenue. Businesses may move into the country, expand, increase spending on research and development, or even change how they report their profits and other changes. This method, however, of stimulating growth is generally deeply unpopular, as it's perceived as helping the government's friends in big businesses at the expense of squeezing the little person. The key to avoiding an austerity budget is having low levels of government debt and avoiding excessive spending that cannot be paid for in increases in revenue. But once it becomes necessary, the quicker it's introduced, the less painful it's likely to be in the long run.